Jamie Dimon, CEO of JP Morgan, sees storm clouds ahead for U.S. economy later this year. And I have been very adamant about we need a recession. We need the stock market to go down for liquidity situations to get tighter and harder to borrow capital to see the shorts be forced to cover. These catalysts we've gotten over the past year, they haven't had too much of an effect on AMC's share price because liquidity was plentiful. People were doing great. If a one hedge fund had problems, they would just go to another hedge fund or another bank, get super cheap money. Voila, no more problem. Well, according to Jamie Dimon, that is coming to an end, possible recession as well as a round of default. So we're going to talk about exactly what he said, but take a gander at AMC for the day, up 6.37%, and after hours down 0.76%. This was a wildly bullish day, going up $1.11 per share. We are at the most important critical level that we have been at right now here today since back here when we tested the $21 level for 3 days in a row and then ultimately broke it pretty damn big, right? 45% here this day to the upside. So we really have a lot to talk about here in this video. I don't want to waste your time. Let's get into it. Hit the like button, subscribe to the channel, and if you guys want to come trade with us live in real time, every time I make a trade, go over news, long-term investing, swing trading, day trading, all of that, we do it all. Check that out, link down below in the pinned comment. So first and foremost, JP Morgan earnings were not great, but they weren't terrible. JP Morgan stock did close down about 3% on the day. So investors did not like it all too much. And what Jamie Dimon had to say, which is again the CEO of JP Morgan, was not good, was definitely not good about the economy. So the key points: the risk that the Federal Reserve accidentally tips the U.S. economy into a recession as it combats inflation is rising, according to JP Morgan Chase CEO Jamie Dimon. I'm simply pointing out that those are storm clouds on the horizon that may disappear. They may not, Dimon said. In the event that a recession does develop, the bank would have to put up a lot more for loan loss reserves, Dimon told reporters. The bank also took a $902 million charge for building loan loss reserves, what I just said. And what is important to know is that $5.2 billion in reserves was held, and that was standard for the pandemic, just for JP Morgan alone, to protect against any losses. And that call it restriction of capital was lifted about a year ago, and this is the first time that they are actually adding to that fund again. So it's definitely a bad sign for the overall economy, but the markets did rip today. And the last thing about JP Morgan earnings we need to talk about is JP Morgan posted a 42% profit decline from a year earlier on increased costs for bad loans and market upheaval caused by the Ukraine war. So 42% less profit, putting almost $1 billion into their loan loss reserves, saying that there's major headwinds for the economy and that the Fed might tip us into a recession, I think is pretty damn clear confirmation of what we are going to expect throughout the rest of this year. And it's surprising the markets really didn't care about that all too much. The markets actually rallied based off of, in part, what Jamie Dimon said and what JP Morgan earnings did look like. And that is good for us. As recession comes, cost of capital becomes more expensive. Hedge funds, banks, they're not willing to just lend out basically free capital anymore. It starts to cost a lot of money. So when these hedge funds get themselves in a tricky situation, when AMC does have another big catalyst and the stock goes up 20, 30, 45% in a day, it's going to be very hard for shorts to remain in their short positions. Even their stock portfolios, their bond portfolios are going to go down dramatically, especially once we head into a recession. And there's not going to be enough collateral to service those margin calls. So nonetheless, negative for the overall economy, but I do think it is slightly bullish for AMC. We'll just say that. But the Nasdaq did close up 2.03%, Russell 2000 up 1.92%, S&P up 1.12%, and the Dow Jones Industrial Average up 1.01%. So it was a very, very strong day. VIX down actually 10%, which is kind of wild. But tomorrow, as you guys already do know, we have those bank earnings. You're going to get Wells Fargo. You're going to get Goldman Sachs, Morgan Stanley, TSMC, Taiwan Semiconductors. You're also going to get PNC Bank, Ally Bank, Citibank, Wells Fargo. You're going to get basically the rest of the big banks, the American banks, tomorrow. And that's going to be very important what each one does say. And that's probably going to move the markets. Now, there is some other headlines that might move the markets as well that we really can't forecast. Like, just keep this in mind. Russia chemical weapons attack. If that news does come out, that is confirmed, I would imagine there would be a sharp move down in the markets. And that could happen over the weekends where the market is not open, or it could happen tomorrow. It could happen right now. Anytime that could be confirmed, and that's definitely going to be a negative for the markets. On top of that, COVID in China, if COVID continues to run rampant in China and they continue to lock things down, that's also going to be a very negative thing for our stock market. So pretty interesting, all of that. Just keep it in mind, anything can happen. It's better to be prepared and know these things rather than not. But as far as AMC stock, why tomorrow is going to be such an important day, take a look at the price action we've seen for AMC stock. This blue line is the 50-day moving average. That is you have to zoom all the way in to see it. Let's go ahead, zoom it out just a little bit. 50-day moving average at $18.54 per share. We closed at $18.53 per share on the day. We're down 17 cents in after hours. So if we do have a bullish day tomorrow and we are even the slightest bit green, you're going to close above the 50-day moving average to close out this week, because tomorrow is the last day of trading. If we break above the 50-day moving average next week, odds are we'll be very, very bullish. And I would imagine we head back to about $21 per share. And you did see a little bit of weakness here in the beginning of after hours, but we are starting to crawl back some of those losses that we have seen in after hours, down about 0.76%, down about 14 pennies here in after hours. So that's going to be the most important level ever since back here at $21 per share. We really want to see that break tomorrow. If we do not, we might trade right under the 50-day moving average until we get either really good news or really bad news. Then you're going to get that final move in one direction or the other. But like I've been saying, I think it's possible to go to 15. I think that's really where you're going to see the floor. That's where you're going to see a lot of demand, lots of support. But it looks more probable that we break above the 50-day and head back into the low and mid 20 range. So that, as far as the technicals, looks really, really good. I'm impressed with what I've seen for today on AMC stock. When everybody doubts the stock, that's the last time that you want to also start to doubt the stock. Usually when people are very negative, usually the time to go and buy yourself some options, buy yourself some calls, or average down on your position if you are down in your position. Now, the MACD, bearish, as you guys know. The RSI curled up a little bit today, but still under the neutral level at 50. It's at 46.07. So that does tell us there's a lot more rally left in this thing before we get even close to being overbought again. So we could see another big move, and the RSI would still not even go above 70, which is like the turns into extreme overbought levels at 70. Now, if we do get a bullish rally tomorrow, if the banks are good, everything's all fine and dandy and peachy, and we can get to $21 per share and I'll close above that, that's going to be important. The next big level is the 100-day moving average, and that is going to be at about $22 per share. So keep that in mind and watch for those key levels. That's why I love the 50-day moving average so much, because it's such a telltale of what's going to happen next. You get a lot of resistance around it, right? And we have an AMC for a while. We've been kind of far off of it. And then you come up, you're trying to test it, can't test it. You finally break above right here. You get a little bit of resistance at the next level, but you just stay far from the 50-day, and then you end up getting that gap up. So I think it's looking really good. Don't take my word for it. I'm not a financial advisor. I'm not a financial planner. None of that good jazz. You guys already know the spiel. But if I were to put my money down on a bet here, it's definitely that AMC stock does break above the 50 and makes its way higher. And as far as the Ortex data, go ahead and give this a quick gander. You could see that we had 23 orders for the day, totaling $10.11 million, positive order value of $55 5%. So it doesn't look like a lot of option activity on AMC stock for the day. And that's honestly a good thing. If the stock can move up 7% with virtually no FOMO buying, no gamma squeeze activity, then that's a really, really good sign once we do get that FOMO and weekly option traders that do head into the stock. It's going to get very violent to the upside. So that is that. The last week, 219 orders totaling $95.76 million, positive order value of 60%. And the short interest is currently sitting at 19.98% of free float. Current shares that are sold short, 102.97 million, cost to borrow max of 3.54%, the utilization of 100%, and days to cover at 2.40. Now, on top of that, like I said, bank earnings are tomorrow, but you also do have these Michigan consumer sentiment surveys that comes out at 10 in the morning. So if you guys see big moves up or down, it is because of this. Stay very vigilant of this. And you guys, I highly recommend you guys use this tool for yourself. Just look up economic calendar or investing.com/economic calendar. This is where I get all my information. It has data points from other countries, just everything you need to know that will move the markets. And it even gives you the star reading right here where it's high volatility expected, or something like the retail control data that also comes out tomorrow, which is a low expected volatility catalyst. These things move the markets. That's the only thing that really moves the markets right now. But you do have core retail sales, and that's going to give us a better glimpse into, hey, is the consumer strong? Are we possibly going to head into a recession? What the hell is about to happen? I think that's important to know, right? Because the markets, they only care about the Fed reducing its balance sheet when it comes down to it. Fed reducing its balance sheet. And they also care about the possibility of a recession. Fed raising rates at an aggressive pace. Sure, markets care, but it's not enough to really crush the markets right now. Ukraine, Russia, markets care, but not enough unless a nuclear weapon was used or a big chemical attack, right? COVID in China, markets care. You could come down a little bit, but it's not going to be it's not going to put a bad taste in people's mouths unless those situations got a lot worse. But that damn balance sheet and data like retail sales, things that can indicate a recession coming or not, those are what will put a sour taste in the market's mouths. So that is that. If you guys are unaware, AMC did buy 7 theaters as well from another theater operator in Connecticut, in North Carolina, as well as New York. So that was obviously seen as a bullish thing today. I don't really think that's exactly why the stock rallied so much. I think it's just a bit of a bounce because we have already sold off so hard. And like I went over, Max Payne sitting at $20 per share by tomorrow. It's certainly possible that we get there, and I think tomorrow is going to be a very, very important day, and it's going to really tell us a lot what to expect here in the near and midterm future with AMC stock. But overall, the fact Jamie Dimon said this really gives me confirmation of what I said 3 to 6 months ago was actually correct. We are heading into an economic slowdown. Capital is going to be restricted and harder to get your hands on for the hedge funds, for the banks, for institutional players, or just regular people like you and me in general. And we're likely heading into a recession. All in all, confirmation to me that we're likely to see the MOAS here in this year. All we need is those conditions being met, capital restricted, right? Make it hard for hedge funds to get their hands on money. See the stock market, right? Bond portfolios have already gotten beat down, but see the stock market come down more as well, and then get a catalyst from AMC stock. I want to be very clear. It's not that capital is restricted, the stock market crashes, bond market has already crashed. It's not those factors that will directly force shorts to cover. It's that plus a bullish catalyst from AMC stock. If those conditions would have been met this day, the AMC rallied 45%, we likely would have seen the first big leg of the MOAS, likely pushed us back to that $50, $60, $70 range. So that is going to be all for this video. I know it's a longer one, but I hope you guys found value out of it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. And if you guys want to come directly, ask your questions, go over the futures, go over any news, what to expect tomorrow, all of that, come join us on the live stream 10 p.m. to 11 p.m. Eastern Standard Time every single day. There is a futures market, or the markets are open the next day. we are live, so including tonight, come ask those questions. If you guys also want to get access to all my trades in real time, as well as join a great trading community, post information, post news, post trades, check that out. Link down below in the pinned comment as well. Follow me on Twitter, also in that pinned comment. Thank you guys for watching, and I will see you in the next one.